Ladies and gentlemen of the crypto space, we're live on a Friday, April 19th at 11:31 a.m. What's today? Today's the halving, I think. I expect. It's not really up to debate. It's going to occur at a specific block. That changes everything. And that's a critical thing to really digest, especially with regard to the topic of today, which is moneyness. Now, it's important that we talk about these topics because the point of these topics and the content of these topics is how you're able to survive in markets for periods of time and how you're able to be forward looking into the future of where markets are going to head over time. Now, the path is going to meander, but the destination is pretty unambiguous at this point. Now, Bitcoin is and has changed everything with regard to its immutable monetary policy, its deterministic disinflationary emissions schedule. It is inflationary, which is very noteworthy. It's not changeable. It's immutable. And that is extraordinary. That's the ultimate innovation of Bitcoin. And that eliminates a Fed. There's no capacity it eliminates Treasury in regards. Actually, it eliminates neither of the two. Go figure. So it eliminates the concept of M0. Okay, that's getting more specific. But Treasury's biggest function is debt, which is another story. So Bitcoin doesn't fix debt, doesn't fix the concept of treasuries, nation state debt instruments. It doesn't fix credit interest rates, which is a core role of the Federal Reserve. So it doesn't fix credit. It fixes M0 as base money. It has very interesting degrees of moneyness as compared to gold. Moneyness is an attribute that is not really subjective, it's a quantitative assessment, and you're able to compare and contrast different assets and their degrees of moneyness. So we've already highlighted that Bitcoin fixes money. Now, something very important to understand is choice. Humans have choice. So, I like the statement that Saylor makes there is no second best, and I agree. But the human race is redacted. There will always be groups of people that want to build second best. So, what does that mean? There is no second best money in Bitcoin terms. Great. There's going to be plenty of attempts, endless, to create alternative monies. And that's why every country has their own currency, not money, their own currency. And that's exactly what we've seen since especially 16 and 17 with the Bitcoin forks. And earlier than that, obviously the 13, 14 era, it was with some of the more interesting protocols that have gained strength nowadays, like Syscoin and even the likes of Digibyte and others draw their roots from those early forks of Bitcoin. And they all have degrees of moneyness, but an important component is consumption, demand, because everything is about supply and demand, and that is what sets price. When demand exceeds supply, price go up. So momentum, first mover, is something we talk about with regard to investing. So that's everything with regard to Bitcoin and its moneyness as compared to anything that comes after, which means that is a way to have the best exposure to the moneyness properties offered by cryptocurrencies. But that has nothing to do with regard to uh, acquiring more money. It has nothing to do with requiring more income in currency form, which can be used to purchase more money. So in investing, you have to go out on the risk curve and you do speculation based on social trends, various supply and demand imbalances, downstream based on momentum and headlines and technological innovation, technology. So that's exactly what everything post Bitcoin is further technological innovation, iteration. And there'll be different degrees of multiples that are available as you go further out and take risk. And that'll always be the case. I like talking about these topics because it's imperative to clarify when very prominent persons say very meaningful things, it doesn't mean what people think. There is no second best. It's a great statement. That doesn't mean the best choice with regard to capital management is to crowd into a single asset. I am firmly encouraging of investing, and investing isn't what people think it is. Money is not an investment, especially currency. Currency is maybe to distinguish the difference between money and currency real quick. Money is best scarce. So it increases in value, it facilitates value storage. Nobody's going to want to spend money, and that's a good thing. You can, it's probably not a good financial decision to spend money. You can engage in money arbitrage, the same way we talk about like FX markets and the spreads between currencies, the spreads between monies, and also the spreads between monies and currencies. So it does get complicated. So you can engage in that activity, but you don't want to spend money. You want to accumulate money. You want to save money. That's what everyone talks about with regard to fix money, fix the world, and debasement of currency. And you want to have a real savings vehicle, and you can't save in the dollar. I don't know. So the whole point is, um, a good money is something you don't want to spend. So how do you construct an economy with the money? You can't. And that's why currencies are very meaningful. Currencies are a manifestation of a money vis-a-vis the credit process. Credit is the facilitation of innovation, where someone who has an idea has a capacity to acquire credit to do and execute on an idea. This is critical to an economy. It's mission critical. Now, Bitcoin doesn't fix any of that, and that's okay. That's maybe not, that's certainly not the point I'm trying to make, that it doesn't fix that, and that's a bad thing. You need many components to achieve a functional financial system, and most importantly, you need credit and incentives. And credit facilitates incentives because if I'm able to try and execute an entrepreneurial idea, that's my incentive. So I can outperform. And hopefully, that good idea is an innovation and allows me to acquire more money. And with more money, I can have access to currency to explore other ideas. So those are three critical components to a functional financial system: money, credit, and currency. So a lot of what we talk about in what's commonly referred to as the DeFi landscape is currency, is also assets with varying degrees of moneyness, which is exactly what we were talking about, uh, things that are comparable to the nature of a Bitcoin. Um, but this space is trying to fix those other components of what is required for a functional financial system. And now everyone's clearly aware we got a shitload of credit everywhere. Credit this, credit that. There's credit. There's borrowing everywhere. There's money markets. There's dollar liability printers, CDPs, which is where Go and CRVUSD and DAI and MIM from Abracadabra, F of N, obviously, and their dollar products. And that's very meaningful. The better of those products, I would argue, are the ones that have two properties: immutability and determinism, because that is exactly what Bitcoin fixed: immutability and determinism. Now, obviously, you can have great conversations about immutability and determinism, and that is typically talked about in terms of like proof of work versus proof of stake and consensus. because how immutable and how deterministic something is meaningful in the risk calculation. So immutability and determinism is really what changes everything because that takes the opinion, the subjectivity out of the equation, the human out of the equation, and it means a system is going to operate tomorrow the same exact way it operates today, no matter what. Changes the entire risk equation. And that's extraordinary. So understand that credit is a required system to fix. Fixing money doesn't fix credit. Fixing money doesn't fix currency. Nobody wants to spend money, and that's a good thing. You want to spend currency. So you need a fixed or a novel currency system based on this novel monetary system using a novel credit system with properties that are immutable and deterministic. And that's how you fix these economies. And that's how you fix really societies because societies need functional economies to be better. Isn't this fascinating? And by understanding these nuances between money and credit and currency, you're able to see opportunity. And this plays into like investment conversation and how do you identify something that is likely meaningful, likely to be used, and something that is used is going to have a skew towards buy side versus sell side, and it's going to appreciate and outperform, and it's going to allow you to acquire more money. So, um, with regard to overall portfolio construction, uh, it's imperative to have investments. So I break down the portfolio into two compartments, cash and investments. So I don't consider Bitcoin an investment, and that's okay. That's not the most important thing to understand is everything I started the stream with to understand money, credit, and uh, and currency. So investments, the need for it is to be productive. And an investment is going to produce probably currency units, but currency units you could purchase money. And if now you're thinking in terms of like a savings account, maybe versus like a checking account. So your cash position is liquid assets that have varying degrees of moneyness, which have varying risk profiles, and that this cash position uh, clearly can consist of whatever the hell you want. It could consist of Bitcoin, gas tokens. I used to say Ethereum, but it's really the whole gamut of gas tokens, and Bitcoin stands apart. And stable coins or dollars in a bank account. And those are all useful things that can be used for settlement in one way, shape, or form with or without an intermediary transaction. You could clearly use Bitcoin for settlement. You just need to convert it to an accepted settlement denomination. If you follow my drift there. So all these things in the cash bucket can be used to buy things. So what do you want to buy? What do you buy? You buy things at supermarkets, you buy, some people buy cars, most people finance, but then you have a monthly bill. But you're buying things and you could buy investments. And what is the point of an investment? The point of an investment is to make you something, give you something, produce something. So Bitcoin is not a great investment. It doesn't produce something. I sound like Vanguard. Was it Vanguard who rejected the Bitcoin ETFs because they're not productive? The whole point is I want to replace work, physical work, trading time for money with owning businesses that do that work for me. What is work? Work is the capacity to be productive or the result of productivity or productivity. You get my point. You get my point? So I want businesses that produce income, which I could use to have a cash position denominated in Bitcoin, gas tokens, or currency liabilities as market conditions most favor. I hope this all makes sense. How we started about money, credit, currency, and how we rolled that into the construction of a rational portfolio with cash and investments and the purpose of the cash versus the investments. And this all is uh, geared around, or think about this in terms of what products, what businesses that offer products and services facilitate fixing a functional financial system: money, credit, and currency. You need the currency, which is a derivative of money, because a good money you don't want to spend, and a currency you spend. You spend it for settlement. A good currency, you'll get rid of it right away. Like, all right, great, here. So the dollar is not meant to be hoarded. You want a good currency is like, all right, I'm going to trade it real quick. I want to trade it real quick for food. I prefer the food over the currency. I prefer the car over the currency. I prefer this investment over the currency. So that's a good currency, something that you'll get rid of real quick. You'll basically trade it for anything. And a good money is something that you don't really want to trade for anything. And you could use it. And the credit allows you to access the equity, the value in that money. So this is the way I think about these systems, and maybe that'll help someone else. Because when I think about these systems, they're quite extraordinary and they really change everything. They change the world. Fixed money, credit, and currency change the world. So I very much uh, not only believe and understand and digest what a lot of Bitcoin folks talk about, I just have taken what they talk about to uh, a functional level, an actual real level that makes sense in for humans with regard to the requirement to invest. Um, Anywho, so I wasn't really here to talk about any particular investments today, or protocols or businesses as we talk about. I really wanted to talk about Bitcoin and give you this base layer breakdown. And I think we've done that quite well thus far. So maybe we could just have a great Q&A today. You guys obviously see the watch list on the right. Bitcoin was at like 59 and change last night. Everyone's like, oh, it's going to fail. 60, it's going to fall down and break down. Bounced right back up to 64.6. I mean, look at the damn chart. That chart is wild. That chart is absolutely wild. I don't see any of these market conditions, even with the geopolitical conflict over the weekend, that warrant any out of the ordinary portfolio activity. Same rules apply. Is not adjusting anything. I don't see any reason to adjust anything. I'm not seeing any discounts really. Um, Look, everything's nice and green today, but everything's still at a significant premium. You can pretty much pull out any chart, and it's not like there's any fire sales on anything. It's not like there's a great opportunity because of the last couple of days worth of activity. So it's really just business as usual, in my opinion. There's no discount on Bitcoin. This shit is expensive, and that's a good thing. That's a great expression. You get that? It's a big deal, but you can't just save your way to a future. You need, and it's maybe for many people, it's a great argument that if they just invested in Bitcoin, they would have outperformed. I would say in response to that, you're a human being, and a human being has important needs with regard to activity. You got to be productive for yourself, so you have to uh, be active. And I don't subscribe to saving in that regard. Like, that's not an activity. Oh, yes, you have to have strong hands and will of steel to be able to huddle for years. That doesn't seem healthy to me. A human being requires productivity, which means they have to keep their mind active. And in doing so, you want to be an investor. You want to own more things that are successful, that are productive, that are real and significant with regard to products and services that actual human beings consume. And there's a whole host, a whole world of things out there that are important for human civilization with regard to technology and innovation. Innovation of what? Credit and currency. and frankly, business for that matter, because we deal with crypto and then you're talking about data availability and frankly on-chain computation at this point. So these are technological seismic shifts. That's important. I can't subscribe to that hodl mentality, even if it outperforms. That's okay. And I will outperform everyone else that doesn't understand these concepts that we've discussed thus far, because these investments in businesses are done because these businesses are groundbreaking for reasons that aren't just shoot from the hip. I have entire conversations that deal with why the things I invest in are truly groundbreaking. I wouldn't invest in this shit if it wasn't groundbreaking in the ways that I can discuss. So this is much healthier, in my opinion, than jamming everything into Bitcoin. I don't think that is healthy. And that is not a discredit in any regard. We've had this conversation thus far about Bitcoin and where it fits into this larger picture. And it's imperative to understand that it certainly fits into this big picture. Just don't find yourself myopic, thinking too small about something that is much, much bigger. And don't be blinded by hatred of what countries have done with currencies. Understand them, how they did what they did, why they do what they do. And it's not just the headlines, money backed by war and violence and stuff like that. That's part of the equation, but it's kind of important for a government to pursue social civility where people aren't killing each other over food. It's kind of important for humanity that neighborhoods aren't getting hatcheted up with machetes like what happens in Africa. That's kind of an important thing to do and achieve. That doesn't occur. So these types of systems are required. So you could hate on the centralization and the mutability and the subjectivity of the systems that nation states have executed. But and we can make them better and we can invest in things that will make those systems better. But those systems kind of serve a purpose and they've done pretty well. They really have. And then frankly, the Fed has done very well because the system hasn't fallen apart because they've financed and finagled liquidity. And that's important. The stock market not crashing is important, people. It's important because people that are retired are dependent on those assets for income, and that's important. Now, it gets all distorted because those assets are appreciating a great degree as compared, and that this is the disparity conversation, and the working person um, is not getting increased revenue. So this is all perverted and distorted because of the interventions. And that's exactly what immutability and determinism solves. It's a level playing field. It's not subjective. Once you define the rules of how money works, of how currency works, and how credit works, everyone knows the rules. They're predictable, they're deterministic, they're going to behave a specific way under specific conditions. And that's why I invest in such ideas, because I think that changes everything with regard to a functional financial system. Money isn't a financial system. Money is just a tool, a component, a mere requirement of a functional financial system. But there's much, much more that go into a functional financial system. I hope that helps. Let's go through some comments. Please remind me or ask me about any of these topics we just discussed at the start of the stream. I think they're very interesting. And the thing I love to do most is to take like the popular headlines and kind of digest them and turn them inside out and realize that a lot of people um, are trolls. They jump on bandwagons, and a lot of people are angry, and that's rightfully so. I myself am angry. You guys hear me yell all the time, but I like to be rational. I mean, go figure that I guess I'm the captain of rationality. So how do you peer through the headlines to understand what actually is and what is the fundamental idea that is trying to be conveyed, and be contrarian, to think different. Because the only way you're going to get ahead with regard to investing is to think different, to approach reality from a different perspective. And in doing so, you see something that other people do not see. And that's how you outperform with regard to investing. Trantaloids in the house. Arrow, hello, good morning. Tap C. Happy halving day. This is a very exciting day. Uh, There's no other way to put it. Trantaloids spoiled on Fridays. They get a Noah stream and a steady lads. Fridays are a good day. Can you please go over voting strat on Ram and Velo? Oh, you want specifics on a day of the halving and a day that I said I'm not going to go over specifics? Very simple. So obviously you're very dependent on vote rentals, but if you go over to vote, sort by, it's not so, you sort by incentivized, reward, descending, and then you want the most transaction fees. So for me, that's the simple equation because I want the most logically, I want the most upfront payment for my votes, and then I want the most after the fact transaction fee revenue. So that's as simple as that. And so, in doing so, you're able to see how much is an incentive, inspect how much is an incentivized reward. You want the most incentive first, that's the upfront payment, and then you want the most downstream payments throughout the week. Simple as that. Don't need to make it complicated. And that's the same thing for basically every protocol. Uh, Now, this is not the same as voter escrow. Voter escrow is just literally upfront payment because you're just getting compensated based on a rental. These systems are rentals plus fees. So these are additive to the more fundamental voter escrow that we're used to over the years. Hope that helps. I'm going to keep that simple, Arrow. I think that's really the only expression that's needed. What choice to make with regard to how to sort. And then the systems will be what they're going to be. And it turns out that like Nile has a lot more rentals. It is what it is. And Clio's lagging, and Ramses is lagging also on Arbitrum. But we're not going to get granular about the on-chain data about which ones are more interesting and why, because I don't really want to talk about investing today. But feel welcome to ask, and maybe you guys could force me to talk about such topics. Alessandro, hey there, everyone. James, happy halving day. Sergio present. Anisette, hey Cap, happy halving. Thank you guys. Thank you all. Pithra, thoughts on Curve price longevity. Curve is doing close to record volume and expanding new chains, yet the price is close to all-time low. Why is the protocol usage not converting to token appreciation? Here's the best answer I can think of. Doesn't matter. So, and that's obviously a contrarian take. Why is price appreciation what people are looking for? Like kids would call that a stupid statement. But if I could buy something that cost 40 cents today, and in 10 years from now it costs 40 cents, hear me out, and that investment is producing, let's say, 20 grand this year in 2024, and in years to come it's producing 200 grand, yet the price is still 40 cents. Would that be a bad investment? So it's a rhetorical question. Maybe price appreciation isn't what people think it is, or isn't the most meaningful thing, or is just the only way the majority look at investing. Token go up. What if there's a different perspective? What if there's a different way to behave? What if there's something more mentally sustainable as a way to engage with markets and serve yourself well with regard to managing capital and investing? And that's what I talk about, revenue. I don't give a shit if Curve is 40 cents next year, the year after, and the year after, as long as the revenue keeps going up. But guess what? If the revenue keeps going up, the price of the token's going to go up. It's going to be more expensive to purchase that revenue. So a lot of what most people think is kind of just not relevant to the optimal way to inspect token price and potential future opportunity. Look, if the volume is going up and the revenue is going up, the token will appreciate in the future when the market digests that and processes that. I mean, Curve literally this week is paying 40+% of the money. It's just most people don't see it because it's not a concentrated, consolidated user interface presentation that you get 20% of base VE Curve plus you could literally, if you have a small position, you get 35% of the money, $5 grand, 45% here. So you literally, someone's getting with a small enough position, they get 65% on the money, APR annualized this week. I can't, I cannot inject the way I look at markets into people's minds, but I would encourage trying to pursue a different way of thinking of markets than token price. It's misleading. There's a greater richness and depth to the investment process when it comes to revenue and investments that optimally produce revenue. And revenue is a byproduct of being productive. They're doing something, they're providing a product or a service. And in this regard, it's facilitating foreign exchange and facilitating credit, which is a product of sorts, also a service, maybe a hybrid. But point being, clearly the products and services are being consumed if the revenue is going up that much and we get the revenue. And that's what changes everything with regard to traditional business models. It's complete pass through. There's no accounts receivable department. There's no accounting department. It's all on chain, baby. I hope that helps, Pithra. The whole point is give a shit if the price goes up or down. I look at the revenue. Now check back in 5 years and you'll see a chart of revenue up and down. I have about 2 years worth of data of charting the monthly revenue I get from everything. Up and down, up and down. So take your revenue. So this is the different way of engaging with the market. So you're buying investments that are producing cash flow, which is basically the same. I'm trying to do like a visual graph. So you have investments that produce income, or you work to produce income. Probably want to work less and have investments that produce income because work, you're tired. So take the revenue from work that produces income and purchase more investments that produce income. And then at some point, you no longer need to work to produce income because your investments produce enough income. And then everything else is another equation, like how do you save that money and how do you manage cash? So as you can see, it all folds into this framework that we started discussing at the beginning of the stream. Arrow, what's your percent split in your portfolio of cash versus investments? I don't know. Right about now, maybe 10%, a little less than 10%, give or take. Yeah, but that's the thing. Do you really need much cash? How much cash do you need on hand? I would encourage people to think in terms of what they want to purchase with that cash. So clearly, with regard to like consumer staples and like food and mortgage, rent, car payments, so you need that cash. That's important to have that cash, but that's not like investment grade cash. You probably need a couple of $1,000s a month for most people, 5 grand, 10 grand. So that there's a cash position there. And then you want to also accumulate a certain amount of cash because you're thinking in terms of what position sizes you want, or and that which is also going to be a limiting factor. So that'll govern what kind of investments you could expose yourself to because you have to have an appropriate position size to even consider an investment. All right, so you save up 10, 15, 20, 30, 40, 50 grand. And maybe for your portfolio, this is all going to be relative to your portfolio size. So maybe your portfolio size says a decent position speculative revenue that's productive now and more productive into the future, 20 chips, $20,000 investments that are producing 30, 40% of the money. So you're getting, like 8 grand a year income next week. So that that's stuff those are the terms in which I think, can I buy an extra $500 a week? Can I buy an extra $1,000 a week? Can I even buy an extra $200 a week? $200 a week is $800 a month. I think my first job was paying $800 a month back in the 90s. So maybe that's a good uh, a bias that I have, remembering my childhood and my first jobs at minimum wage and lifeguarding, because that's what it was up in New York, the public pools, and there was lifeguarding. So if I could buy $200 a week, I think that's pretty damn interesting. And if you could buy $200 a week and do it again, and do it again, and do it again, now you're getting somewhere. Food for thought. Hope that helps. Alessandro, hypothetical scenario here. Say you had to start from scratch and you had 50K. How would you go about allocating and constructing a portfolio at this moment in markets? Now, the problem is, start from scratch means you also have no knowledge. So maybe that's not what you're implying. But the problem is, with all the knowledge and experience I have, and frankly, a lot of people that listen to me at this point have, nothing's at a discount. You want to know when something's at a freaking discount, you look to hindsight, you look to the trends. So you're not gonna necessarily pursue cash flow at this point because you don't want to over concentrate. So I wouldn't say to concentrate. This is actually at a discount. So Curve's at a discount. Okay, so fine. Maybe Curve is the best damn investment that we could possibly see. Maybe this is an extraordinary opportunity. But that also implies expectations. For instance, 40 cents in the end, about 20 to 40% of the money. So 40% on 50 is 10% on 50 is 5, 40% is 20. So you get $20,000 a year. Income. $20,000 is certainly not going to replace work for anyone in the United States. And $20,000 is also relatively limited with regard to investment capacity, especially with shit at a premium. Everything's at a premium. You're not buying Aerodrome at 7 cents. Everything's at a premium. So this is not a good time to invest. And that's really where my mindset is at. I'm at the point where it's like, what the fuck am I going to buy? Everything's at a premium. When are things going to be at a discount? Things are at a discount when they nuke 80% from their high. That's a discount. And there'll be a discount here. It's not coming anytime soon, in my opinion. I think this is going to go up, up, and away. So what does that mean? That's fascinating. If I think this is going to go up, why not buy it? Because I want to buy it cheaper. And if I can't buy it cheaper relative to its most local top, I'm not going to buy it. And I'll wait until everyone no longer thinks it's a good investment, but I know it's still a good investment. And that's like down 80% because everyone sold their shit. They thought it wasn't a good investment, but I see through the bullshit. Then I buy it. That's like buy when there's blood in the streets. That's a typical phrase people hear. And I put it into more robust terms of I take that statement and I give it an entire story. Buy when there's blood in the streets. Buy a discount in a business that you know is still a significant business. And that means you're buying something that's mispriced. This is not mispriced right now. The market is filled with capital. It's been monetized for the last 2 years, since the end of 2022. It's been monetized going on 2 years. And on all days like today, the halvings, everything's mispriced. So I would be very specific about your question, Alessandro. If I had 50K, so applying today and constructing a portfolio at this moment, it's a shit time to start investing. Because what have I talked about with regard to cycles? It's imperative to digest the cycles. So, for instance, look at Bitcoin relative to bottom. Let's take off logarithmic. Let's blow it up. Bitcoin is up. It's a freaking massive premium in the way I talk about it. So as much as plenty of other people will have statements they can make, I have to stay within my framework, and that's my definition. My definition is that Bitcoin is at a significant premium currently, and that has a variety of meanings. So it's up, topped at 352%. Okay, when it's down 80% is what I just said, and everyone else has abandoned it, that's how you define a region of discount, a region of mispricing, when you identify something that is still significant to society with regard to its contribution, its offering from a product and service standpoint. So that was a shit time to be investing, Alessandro. That's what I would say. But the burden with saying that is that only comes with years and years of experience. And that's not going to be something that a novice is going to have at all. They're going to be like, all right, I have capital. What do I buy today? Well, what can I buy? And for me, and what I tell everyone on Discord, and I tell you guys right now, I think I'm done investing for this cycle. And investing, specifically investing. And that means the mode of operation changes from great, I have great investments. They're going to appreciate. The revenue is going to go through the roof. And I'm pulling in all this cash, cash being the various denominations we've discussed. And I could vary the denomination of my cash, Bitcoin, Ethereum, Solana, what have you. And that comes in the spread between the difference in value between this instruments in this cash portfolio. And now you're heading down the road of trading, as the general public calls it, which is capitalizing on the change in relative value between highly liquid assets. Liquid assets meaning you could trade them very easily. So you could capitalize on the change in price, which is trading. So now that's in good part where I'm at. So I do have some cash saved up over the last week to potentially invest, but I don't really see anything worth investing in. I don't see anything that's significantly mispriced or at a discount. Everything's at a ridiculous premium in my framework. Hope that helps. So, Alessandro, this is not investing season. So, with a 50 chip, you got to learn. I don't know. I don't know how to describe other than telling the story that I tell, but this is kind of like cash management season. But that is an entire definition. If someone is asking you these questions, have them start from the beginning of the stream to understand the very basic definitions of these of the portfolio components. And you really have to understand money, credit, currency to even get a sense of why these cash instruments, Bitcoin, gas tokens, stable coins, vary in price, and to really understand why these cash components, Bitcoin, gas tokens, stable coins, vary in price. Now you got to understand macroeconomics. I promise I'm not going to digress. But holy shit. Holy shit. So to understand the variance in the prices of the for trading purposes, you got to understand what this is. So now you're talking about geopolitics. So I don't have an easy answer. This is not an easy game, Alessandro. It is an entire world that needs education to begin engaging in this kind of activity. So you have a calculated way to achieve success. Calculated meaning what I do is methodical. There is a great deal of effort and thought behind every action I take at this point. Hope that helps. Ask any questions, Alessandro. I'm more than happy to talk about that. But look, that's a very simple question that a lot of YouTubers would have been like, yeah, you're going to want to buy this. You're going to want to, holy fuck. Very different answer you get from a guy like me. Arrows, convex still looks terrible. Same thing as curve, but it's productive because the vote rentals are going to go up because it's a B2B product. If a business wants to start and they're creating a token and it's a credit product, whatever the hell it is, or maybe it's an NFT gaming platform and they have like an internalized economy, so they build a currency. They need to give that currency value. How do you give that currency value? It needs to have a market, it needs to have a liquid market. So now the business is asking, how much capital do I need to raise in order to finance a functionally liquid market for my in-game currency? It's a B2B product offering. And that's what everyone, the pros or the experienced person, see it as, because that's what it is. And that's going to be understood and digested more and more and more going forward. And when you go to Vodium and you see 10,000 vote rentals, that's what's coming in the years to come. Now it's just a handful of the survivors of 21 and 2020 and 2021. Just a handful of survivors that are surviving. Alchemix is a big renter. Frax clearly structurally significant renter. And there's a whole host of renters. Even PayPal's renting at this point. Where's it heading? It's heading a lot bigger. 10,000 different companies renting to finance required liquidity depth so they themselves could operate a functional business. Destination is very interesting. Hope that helps. Comments, let's catch up. Lots of good comments today. If you're on YouTube or X, throw your comments and I'm going to answer everything. And today's probably a good day to throw in some good comments and I'll answer your questions. Good morning, DeFi Advisor. How are you? The A Advisor, Thana, the Cap. I am the Cap. Diego, hi, Noah. Are you interested in NFTs? I like gaming, NFT gaming. I'm a big fan of Gods Unchained, and I look forward to that new set coming out. Um, Not the best. It was never the best. I like Magic the Gathering and stuff, but I sure as hell love the power of the cards, the instruments, and the capacity to construct. I like those types of games. So I really like Gods Unchained, and then I like my cards, and I have very unique cards, and so I do have a interesting collection of NFTs. It's just in that sector of the NFT space. Hope that helps. Um, Daniel, hi Cap, good morning. Why do you think stablecoins yield in DeFi are 3x higher on average than last cycle, when last cycle there was more TVL in DeFi? Well, TVL means you're probably going to be diluted in some regard, but it's also financial activity. Yield is inversely proportional to attention. So yield gets diluted when people are exercising things opportunistically. Uh, so yields, as more activity comes into the space, as crypto becomes more popular over the next year or so in this cycle, those yields will be significantly diluted. And it's going to be very interesting to see how things play out with regard to crypto native yields as compared to the risk-free rate dollar denominated in like US government long duration debt. So there's a lot of fascinating things that are going to play out over the coming years. It's not even just this cycle. Look into 2030 and things are going to get weird. This is an economy of economies, and more people are going to be realizing that. And the capacity to start a business in this economy, given all its properties, it's going to be a very popular place to start a business. And it's not just the shit they do in DeFi. It's not just credit and money markets and tokens, and this is all like the cent shit. This is all test net. Let me be very clear when I state that in the grand scheme of things. All of this is test net for a basic fundamental economic financial infrastructure. Because what is finance? What is an economy? Money, credit, currency. And once you have those tools, once you have those fundamental components, businesses form. Businesses because of opportunism. Someone has an idea, they create a business. But you need the fundamentals of an economy to even create a business. And these are the fundamentals of an economy. So businesses will come, and that's where things are heading. That's your destination, folks. Hope that helps. Uh, Pithra, because you're longing it. What were you asked about Curve? Well, longing it. Why are you longing it? Where do you think the multiples are going to come from on Curve? Broadly speaking, my inspection is maybe it ranges between all-time high and like a buck for the next 10 years. If you're longing it and you're looking for like a 5x, I mean, that seems like pretty large opportunity cost compared to the other shit out there that runs 100x on the money, and you're longing it and you turn a 10,000x. So it's not really something I'd be interested in longing. This is the rational way to engage with capital management should be boring. Why? Why should capital management be boring? Because when you're on a beach, I mean, I'm not even talking about like extravagant shit. I'm saying you live in Florida or Texas or Louisiana, and you're like, you want to go with the family to the beach. You shouldn't have to be like, oh, I got to check in on my longs. Capital management, once you get past your initial, not you, but everyone, Pither, their initial insanity with capital management, you want it to be boring AF. Trust me, because that makes sense. You don't want the concept of longing and shorting. Maybe intraday, and you capture, a 5% move and you're 50x long. So maybe intraday is fine. And that's a reasonable activity, but cross day? Oh, no, 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 no. So I'll see you at the beach. I understand what you're saying, though. Adam, happy having. How do you think about cash percent part of the portfolio versus investments? I am leaning more and more and more towards less and less and less cash. Cash is only needed as a transitory destination to service obligations. What you want is investments that are productive and are nascent, so they're going to grow. So their principal will increase in value and their revenue will increase in value. And that way you could accumulate more cash. So at some point, you're probably going to be like, all right, maybe I don't want to invest this year. So I'm not there yet. I like to invest. So my cash gets invested. But at some point, you accumulate cash. And what are the optimal cash denominations to accumulate? Clearly, Bitcoin is very optimal to accumulate as a cash position very cyclically. And you need to be cognizant of currency spreads. So maybe you want more stablecoins, dollar stablecoins as compared to Bitcoin. Maybe you want more Ethereum as compared to Bitcoin. Maybe you want more Solana as compared to Bitcoin. Maybe you want more Bitcoin as compared to all the other stuff I just mentioned. So cash part of the portfolio is probably best understood from like a novice's perspective as something you trade. You trade cash. And that's what Forex traders have done for generations, decades, since England decided to create the Forex markets. And you trade them back and forth to capture a spread. And that's what trading is. And that's cash management. So as an investor, I'm still young, 41. I like to spend my cash on investments. So I favor less cash because the investments are going to be productive into the future. I don't need as much savings. The investments will produce that income and grow into the future. As I get older, I'm going to want more cash and less investing. But what do they always say? You never want to get comfortable. You never want to get too comfortable. And that's the burden of capital management. Burden of capital management. There's always something new. Demographics are always changing. Opportunities are always changing. So sometimes you still need to be on your toes. There's no end to capital management. There's always just making the best decisions possible. Don't get comfortable. Got to keep investing. Yam in the house, catching a live Cap, LFG, my man. Ryan, Cap, what's the minimum amount of capital you suggest using for investments versus capital gains? From a low to mid five fig portfolio, it seems like investments wouldn't pay enough to impact much. Yeah, we've talked about this topic a lot. It depends on expectations. If you're expecting to, with five fig, let's say the low end, 10K, you're trying to turn that 10K into 10 million, you're not going to do that with investing. Investing is for the guy who wants to go to the beach and not worry about his capital because he's producing income. You want to turn 10K into 10 million, that's capitalizing on spreads, which is trading. So it very much depends on expectations. It's an important thing to accept. And my encouragement is for people to limit themselves because and expectations go way too far out. And what happens is, if the expectations are too high, people most often fuck up achieving them. And that's when the guy blows up the $500,000 portfolio because he tried to make a fortune and now he's broke. And literally, that's the story of crypto. Make it or break it. YOLO. So my alternative presentation is to have much more reasonable expectations. If you could turn five fig, let's say 50K, you could go 10x on the money this cycle, and you go 10x on the money into 2030, you just turn 50K into 5 mil by 2030. That's more than the vast majority of people on the planet. It's more than the vast majority of people in America, and clearly the vast majority of the people on the planet are not even close to what folks do with regard to capital in the bubble of America, Europe, and parts of Asia. Don't compare to the bubbles. Remind myself of that all the time. Like I go out and it's calm outside. There's no little traffic in this little bubble of where I live. And then I drive to like work, like in Miami, and I'm driving through a variety of neighborhoods. I drive through Hialeah. That's not the bubble. That's the real world. That's the majority of the world. So it's very important to understand the world in which you live in order to set your expectations is very reasonable. Being humble is hard. And I think that's a very important attribute to have. And a lot of people that are gambling on meme coins are not very humble, very greedy. And I think that's something to fight. I don't think that's very reasonable. I don't think it's healthy. I don't think it's sustainable. And I think it's the antithesis of the way people are going to achieve their expectations. The expectations of most people are highly, highly unachievable. Hope that helps. So it's a hard question, Ryan. I would encourage. It depends on age. If you're younger, you have more time. I find just a 10x path, and you can have very reasonable investments with five figures. That I think 10x is very reasonable in crypto markets. I think the entire space as a whole is reasonable from crypto markets. Now, clearly, I'm biased from living through 16, 17, 20, 21. And we never know the future, but the rules still matter. And my rules are time tested, mother approved. Everything's at a premium. This is a very shitty time to invest. It's not, I'm at the point where I'm not investing. There's nothing at a discount. There's nothing that's still mispriced. No, things will be mispriced from all time high, but I don't give a shit about all time high. I care about all time low. I was going to show earlier a chart like this. Yeah. So Bitcoin was at 15.5 in November of 22, Q4 22, where everything bottomed. If Bitcoin does something like this, if Bitcoin does something, I can't even draw the damn chart on a non-log scale because Bitcoin just moves logarithmically. So let's say Bitcoin does something like this. I don't know, blow off top, let's say 300,000, and then retraces to 50 something. Why did that happen? You bought at a premium. I'm sorry, I'm yelling. The price is a premium right now. And this would be a ridiculously awesome chart. So how do you know when these types of cycles play out? That's why we talk about the likes of Mike Hallow. That's why we talk about Luke Groman. That's why we listen to Raul to get our hopium up. And that's why we understand what the hell Brent Johnson talks about. That's why we appreciate what Lynn Alden talks about. There's countless reasons why this chart is a ridiculously awesome chart. End of 2025, sometime in 2026, Bitcoin's at 55 after being at 300,000. And someone's losing money who bought at 65 or whatever the hell the price is right now, 63, 64. I'd rather buy it at a discount. And how do you know when there's a discount? You got to look at stuff like the MOVE indicator or National Financial Conditions Index. It's a hell of an index. You see the NFCI start to spike, get the hell out of the cash position, and you protect your nominal dollar value. I mean, these are big spikes, big spikes where financial conditions get tight, and then the kitchen sink gets sold. Everything gets sold when financial conditions get tight. One of the biggest reasons everything gets sold is when MOVE blows out. You have to understand the bond market, how collateral works, how money works in the real world. And in the real world, the money is US government bonds, not at the margins. That's the core of the system. And then money prints currency, which is dollars, based on a system called credit. That's the way the real world works. So everything's at a premium right now. And it looks like, this is all lining up. The macro stars are lining up into the halving, into government refinancing in 2024, $10.8 trillion refi by the end of the year, combined with MOVE rolling over, combined with maybe a quarter percent, 0.5% interest rate cuts. So you got literally the perfect macro stars for the currency cycle. So the currency cycle needs to expand, and that's like what Raul talks about when he looks at like M2. But M2 is the funny thing is M2 is really myopic compared to what Mike Howell talks about with regard to like systemic liquidity. But when Raul talks about M2, global M2, not just U.S. domestic M2, just going up at 8% a year, that's a small part of an even bigger picture. But these are the macro conditions that are required for that currency expansion to occur, and that expansion needs to occur because otherwise, Immortan Joe over there is looking like he wants to eat me. That's a Mad Max Fury Road reference. Good old Immortan Joe. So when this is spiking and the dollar is spiking, Immortan Joe is calling our names. I hope that helps. It's not simple, but it's certainly not simple. But this is worth all the effort in the world, to try and understand. So instead of going into investing, buying a meme coin, which isn't investing because it's a cash position, because it's liquid and you can sell it. So instead of going into capital management, better said, blind, educate oneself. And I'm here. I go through Q&A exhaustively, the whole list, 3 times a week. And with ChatGPT, you can ask anything you want, 24 hours a day. Educate oneself. The only way you can understand crypto is understand how money works, how currency works, and how credit works. And you do have to understand a great deal of geopolitics and how the global system works. And for the love of God, understand what Brent Johnson talks about, how the dollar doesn't end in collapse, it ends in DXY at 1,000. Oh my God. Very, very important. Looking to diversify my bags, not cash, thinking about FXN, Pendle, looking forward to Napier. I am looking forward to Napier as well. Clearly being a modest investor in the space, curve ecosystem. I will have a gifted large exposure to Napier. And frankly, I'm very excited to what it does, what it offers the system with regard to functionality. It's a big deal. FXN, I have a very high opinion of Aladdin DAO and FXN. Check it out. I'll give you guys the same breakdown I have of everything thus far in the stream. It's at $96. The chart will load. All right. You should have bought it at 14. What does that mean? It might be at a discount relative to where it's going. It might get to 500, 1,000, it go 100x on the money, a half a bill. Great. That's a big deal. It's not at a discount. So how do you consider those types of allocations? Can you get enough of a position size considering the appreciation that has occurred thus far? I can't. I don't have like a 50 chip or a 100 chip sitting around. Now, when I say these numbers, they're relative to the overall portfolio construction and the position sizes. So for me to take on a business, I need to have a position size that one feels right relative to the other investment sizes I have, and two, it needs to actually be speculatively productive. So it actually is quite productive from a vote rental standpoint. So that's not really necessary to uh, uh, necessary to question. That's there. It has the productivity component to it. So clearly you can do an XYZ calculation, which is meaningful. But frankly, this thing can retrace to 37, and that's a lovely appreciation. If this is at $37, $43 sometime in late 2025, it's up 300% on the money. If you put 100 grand into it, you have a 300 grand position. It's not as simple as folks think that you could just jump into markets right now. Expect everything to go down in price. That is a great mentality to have, because if you expect everything to depreciate and it appreciates, you're smiling and you're winning. So if you expect everything to go down, the question becomes bottoms. Bottoms are much more interesting than tops. Where can something go down to? Is it lower than now? And that's exactly what I showed with regard to Bitcoin. And then that's also why it's imperative to distinguish between cash and investments. This is not a good investment. Good cash. What are you going to buy with it? I wouldn't buy something with it. I'd print currency with it. So that's what Bitcoin maximalists talk about, where cyclically you borrow dollars against your Bitcoin, and better be prepared to handle that volatility. You probably want a health factor of like 5 or 6 Aave terms, and you borrow cash and you spend that cash. But guess what? 27, 28, and Bitcoin's at 1, 2, 3, 4, 5 mil or whatever the hell it's going to. Now you can borrow more cash, and that's great. That's exactly what you're supposed to do with money. But guess what? You're probably going to need some income from investments just to make sure that your health factor is on point. So you don't want to spend the money that you borrowed to manage your health factor. You probably want sources of income, so you have choices that you can make with how to manage all of these components of a portfolio. Bye, ladies. Take care. Um, so where was I? I lost my train of thought. Uh, let's go back to the question. Diversify. I like F of N very much. It's a meaningful component right now in the current federation. It's consuming them as probably one of the strongest businesses of the entire federation. That's very interesting to think about. And listen, my sentiment is if you have $20 positions, $30, $40 positions, I mean, lovely. Let it ride and hope and lock them if you can. And make sure you're not locking the 100% of your portfolio. It should be a properly sized part of the portfolio. But that is a great price to have. Great price to have. Hope that helps. Might not. Ryan, second question: for how much you champion Warren Buffett's investment philosophy, how do you square that with his aversion to cryptocurrency? He doesn't understand it. You can't invest in what you don't understand. And if I talk to even the most crypto adverse person in terms of money, credit, and currency, and talked about it in terms of business, or maybe I fold it into a real estate model where these businesses are like banks, but banks that where you could tap equity and collateral in 30 seconds, they'd be like, oh, talk about no underwriting, not a month or two to see if you could get hard cash from a lender at 30%. And these systems are permissionless, people would process it from a real estate perspective. I've done that historically with real estate investors. And from an older mindset of an older investor, they'd appreciate how I describe these systems in terms of businesses. And I think they'd really appreciate these being businesses with no people, no boards, that are deterministic. These are the rules. These are what they're going to do under all conditions. I think that kind of changes the equation from a risk standpoint. Oh, there's an activist board member who's going to do some weird shit. I'm not investing in that company because if this guy is on the board, he's going to fuck things up. He doesn't understand it, and that's okay. You can't invest in what you don't understand. So I talk on the stream. Everything we talked about earlier is critical because you have to understand money, credit, and currency, geopolitics, and macroeconomics to begin to understand the businesses that we look at. So that's how I square it. Hope that helps, Ryan. Lasker. Hello, Noah. Have you checked Aptos V33 Solana Finance? No. Here's an interesting way to inspect high level where to start looking. If you go over to volume and you go over to chains, I was there. So this is the chains that have activity. And what you want to see is the delta in activity. And you can clearly, but look how small they are. So you want to, so this is like when we were showing the RAM voting procedure. It's like sort by percentage weekly change and then go down the list and find something that actually has meaningful volume. What is ORI? I don't even know. 800, 600, hundreds of thousands. You probably want to look into millions, like 7 million volume. All right, this is interesting. A 77% jump in week over week volume with 7.87 million volume. That's a microscopic chain. That's interesting. But so that's something to look at. And you go down the list. Look, Hedera. Maybe there's where there's volume, there's opportunity, especially delta in volume. And you also want to make sure there's a liquid market, because if it's 500% increase in volume, but you're talking about 100K worth of activity, doesn't really mean much. And if you look at the big boys, this is billions of dollars worth of financial activity, like mainnet is billions. So when you're looking at 3.62, that's microscopic to say the least. But I like this inspection to see what chains have opportunity. Oh, optimism, 47% increase in volume week over week with $78 million worth of financial activity. I hope that helps. I don't know what Solana is, but is that a protocol or a chain? It's certainly not on any of the large chains with regard to volume. Not weekly change. I want volume. So here's your big volume on different chains. Go down the list. Be data driven with regard to opportunity. I'm very interested in what is going on in optimism. 47%. 42% of Avalanche finally catching a bit. It's been a little stagnant lately. 29% on Arbitrum with 29 we could go over to the liquidity page and see how many dollars are flowing in that market. It's a lot of dollars. So I'm very excited for Arbitrum. Hope that helps in how to look into where to look for opportunity. Now, opportunity, as I said earlier, not really looking for many investments at this point. Maybe there's something new. Maybe there's a new up and coming chain that has an infusion of 20 mil and is doing like 5 mil a day in volume. Okay. Frankly, that's Linnea. And that's exactly what we found thus far. And it has a narrative of consensus. That's a pretty big narrative. 51% still, and that's a hell of an uptick in volume. And if you zoom in a little bit, I'm messing up this chart horribly. So you zoom in here, and then you go over here and get rid of that. That's a big delta in volume. So this has been interesting activity thus far, and you can literally see 98% week over week and 50% week over week for Nile. These two are forming a very obvious duopoly for this network, and they basically go back and forth at this point in volume. A little bit difference in TVL, which means Nile has more capital efficiency, which is an interesting observation, but I think they're both basically entrenched at this point, given that they're contracts and they're immutable and they're going to exist into the future. So it's like watching two suns rotate around each other at this point. The suns are going to be there for quite some time. They're going to dominate the space. There's no way anything like V33 has been dominating all of these chains. Solidly an equalizer on Phantom, except Avalanche. Very interesting that Trader Joe is so damn dominant on Avalanche. Power creeping up the list, but 2.76 mil compared to 58 mil. They got an uphill battle ahead of them. Very interesting how these the venues for foreign exchange have changed over the weeks and months, and then if you zoom out over the last couple of years. Hope that helps. Greetings from Finland. Much a pleasure. I love your country, and I would love a Finnish sauna. Much more accessible. Maybe in my house. God bless. Hope you have a good day. Enjoy a walk. Enjoy some views. And the next time you're in a sauna, just the captain loves those places. What do you think about Thana? Thana, my sentiment was to take a position, V33 exposure on Binance. Now, very interesting to see Thana up at number 2 at this point, above Uniswap. But Uniswap has been creeping up. Pancake Swap is dominant. Now, that's a very interesting thing for Binance Smart Chain because usually Uniswap on any chain it exists is dominant. But Binance Smart Chain was the first Ethereum virtual machine network after Ethereum mainnet back in 2020. And PancakeSwap set up shop. Clearly, it's a Uni V1. I don't even think it's Uni V2. I don't think it's V1. Uni V2 fork, and they've been iterating thus far, so it's highly mutated at this point. This thing has totalitarian ownership of Binance Smart Chain, but great. There's always a marginal actor, and V33 facilitates liquidity financing. It's a B2B product, so they're entrenched at this point, and it's very interesting to see what they've achieved on Binance Smart Chain. Great exposure to cash flow on Binance Smart Chain, the type of exposure that I want, the type of cash flow that I want. So it turns out these V33 solidly forks pretty much carving out positions on all of these markets. Hope that helps. Wise Words was looking for a long scalp because Curve looked extremely undervalued. But yeah, 95% of DeFi and microcap guys, speaking of DeFi, scale on base by equalizer is looking like a real bargain. Let's take a peek at base. I have a very high opinion of basically base in general, Aerodrome specifically, and Coinbase's inevitable flooding of the market with users as very exciting. Scale, equalizer. Maybe you're talking about equalizer. Uphill battle. So something about equalizer is it's very low capital efficiency. Even on Phantom, it's very low capital efficiency. So maybe that's a manifestation of their tokenomics. Solidly is outperforming equalizer on base with a half a mil in volume, which is pretty small. So I don't know what the scale is. But obviously, Uniswap owns base, no matter what anyone says. Aerodrome is the de facto exchange on base. Yeah, no, Uniswap is. So I have a very high opinion of Aerodrome, and I think this mimics exactly what I just said about Binance Smart Chain, except with Uniswap instead of PancakeSwap. So you'll have your dominant actor, but a great investment doesn't need to be the dominant actor. The great investor needs to be a great underdog and that offers something innovative, some sort of product or service that's innovative. And that's what Airdrop offers. And you can literally see it in the volume, and it is up there. So Maverick is going to be an interesting one because that is a great product. I don't know if their Mav wars are going to come or not. I don't know if their federation is going to build or not. But that's what Maverick needs. It's a voter escrow protocol, not a V33. So it requires downstream recyclers and sterilizers. And that brings up the entire Curve Federation conversation, which we're not going to get into. But it's very interesting to see such a massive capital efficiency out of Maverick, which they're known for. And seeing them this high in the list on base, this is going to be an interesting one to watch play out. Aerodrome. Love a piece of Aerodrome at a better price. Anywho, Adam, would you be able to walk through the logic for how increased interest rates juice the global dollar printer? Okay, very, very simple. So obviously, cheap interest rates, people want to borrow, and they don't give a shit about paying back because they don't have much to pay back. But let's say for the last 15 years, you're a banker and you sell a product. What do you sell? You sell loans. What do you need to give loans? Collateral. People need to post something. It's not the typical consumer in America person that thinks about these things, but when you buy a home, down payment isn't collateral. That's just a little gesture that you have a capacity to pay what you owe them. Collateral is the home that you're buying. So when you are in the world of business and you want to borrow dollars, you got to post collateral, and that collateral for the world is US long dated, long duration treasury bonds. That's the way the world works. So, and you're the banker selling for the last 15 years a 1/4%. When you sell, $500 million loan at a 1/4%, how much of a bonus you think the bank's going to be giving you? They're not making much. They're making a 1/4%. You're about to enter a world where they're going to be selling 5% loans. So what's the incentive for the banker to sell a 5% loan versus a 1/4% loan? Oh, they're going to be taking people on trips to the Alps, wining and dining and bonuses and discounts and perks. They're going to be throwing around money because the bonus on a 5% loan is going to be a lot more than on a 1/4%. So it's just that reality. And to top it all off, U.S. government cyclically is going to flood the system with collateral. And that collateral has really one purpose, one main purpose is to print dollars using credit from bankers that sell dollars. That's how the world works. U.S. long duration debt treasuries are converted into dollars through banks and ledger accounting, which is broadly called the Eurodollar banking system. That's where we're heading into. That's why higher interest rates, or how higher interest rates are going to flood the system with dollars, because bankers are going to be highly incentivized to flood the system with dollars and sell loans, sell dollars. Hope that helps. Snoke, the one and only Mr. Captain, much a pleasure. Trevor Van Meter in the house. I appreciate each and every one of you on this halving day, 12:55 p.m. Anything else that we could go over? Linnea, look at that strength on Linnea with Nile. Very interesting. This has shown just a great expression from a technical chart. Look at that. Lovely. 0.5 retrace, bit of a bounce. If this follows through, it just becomes a wonderful chart. And we've seen stepping stones and legs higher. But it's nice to see a strong retrace, which is why the fib retrace is so meaningful. This is an expression of weakness on Ramsey's, but these were absolutely massive moves to the upside. Uh, let's see how the structure evolves for the technicals on that chart. This is an interesting one from Cleopatra on Mantle. Some nice intent to X went over to Mantle. Mantle is obviously the strong Athena narrative and MF. Uh, and from a technical standpoint, it's a fat inverse head and shoulders at the bottom, which is basically why I bought it. And then you have basically brewing here potentially as a fat, nice inverse head and shoulders. So this could be interesting. This is obviously a kingdom expression on Mantle, which has a fair amount of volume and activity. And we can see that in the data. 52% week over week increase in volume. So you want to see where the activity is, because where the activity is where capital is going to flow to. Capital flows from underperformance, boredom, lack of opportunity, decreasing transaction volume week over week to markets where there's increasing transaction volume week over week, from underperformance to outperformance. And that's how capital flows cross market. And base has been lackluster. 10% last week. Now it's at minus 3.2%. It's rolling over. It's in the data. It could clearly spike, but the point is it has been rolling over. So all people need is a nudge. And the nudge here is contraction of the meme coins. You're going to have few remaining meme coins that are going to survive and thrive. Aerodrome is going to do very well. It could obviously retrace it further. But capital is going to rotate off because the crypto space is very frictionless to move capital from market to market. So capital is rotating. That's why it's minus 3%, a negative number week over week. The top of the office being flooded with stable coins. And it's just tremendous amount of stable coins flooding on the base. So what's with the decrease in activity? So I find that an interesting observation. And then you go over to other networks with a huge amount of stable coins, more dollar liability supply than anywhere other than Binance Smart Chain is Arbitrum, and it's up 30% week over week. These are big numbers. The cent, hard to get a sense on but 12% week over week on Ethereum is a large increase in financial activity because you're talking about $2 billion a day of financial activity. This is the hub. It's the centerpiece of financial activity. And that is a complete contrarian statement considering everyone's distaste for high transaction fees. But this is where the vast majority of financial activity occurs on Ethereum mainnet, irrespective of transaction fees. That means nothing for the folks that love L2s. And I like my penny transactions as well, but they mean nothing compared to the amount of financial activity that occurs on mainnet. 47% week over week on Optimism. Very marginal network with regard to total volume, but it's still systemically significant considering the superchain narrative, base, Optimism, Fractal, and whatever superchain comes online. These are big ideas. Very, very interesting. Anywho, last couple of questions. We'll wrap it up for today. Okay, I think I nailed all your guys' questions. Any further technical stuff? I mean, it's nicely green today. It's halving day. Bitcoin bounced off 59, so we're seeing green across the board. Don't get caught into buying at a premium. You have to define your rules, define your framework, and be careful. You know, you want to buy things at a discount. And I know it's hard, but never stop asking questions, whether it's me or people on Twitter. And obviously, people could be, quick to respond in a non-constructive way in social media, but don't stop asking questions because that's the only way you're going to be able to develop this robust framework and methodology and find your comfort in engaging with these markets. It's the only way to make money in these markets is to survive, and then time and the markets will do the rest. I wish you all a good one. 540 people made it to the end of the stream. I think that's a record. God bless each and every one of you. Please tell everyone to subscribe because together we can do just a little bit better. We made it to 1 p.m. And I will see you guys after the weekend. Happy halving day. Peace.